Are you a high income W-2 earner who feels there's nothing you can do to reduce taxes? Are all the tax strategies reserved for only for business owners? Let's talk about that today. Hi, this is Angie. I'm on a mission to help you keep more of what you earn, grow your net worth, and make taxes less stressful for you. One of the biggest misconceptions I hear is, well, Angie, I'm an employee. I don't control my W-2, so I don't really have any tax planning options. Now, that's not always true. Over the years, we've helped several high-income W-2 taxpayers strategically plan and implement tax reduction strategies, obviously based on their individual situation, goals, and objectives. The key is you cannot treat your tax liability just like another bill. Tax liability is not like your utility bill. It's not something you should simply accept after the fact. Taxes are your largest expenses that you will ever pay. Just like you would not buy a house, sell a business, make a major investment, or even retire without planning, you should not approach taxes without a strategy. Now, proactive tax planning asks very different questions. What income is expected this year? Is there going to be bonus, stock options, capital gains, RSUs? Are there opportunities to shift timing? Are you maximizing your retirement contributions? Does does Roth conversion make sense for you? Are you charitably inclined? Can charitable strategies be coordinated with a high income year? Do you have real estate? Do passive activity rules, depreciation, cost segregation, etc. apply to you? Are you withholding and making estimated tax payments, and are those aligned with your actual projected tax liability before after planning? This is where planning can create a meaningful difference. For many high income earners, the goal is not to avoid taxes, the goal is to legally reduce, defer, or strategically manage taxes using the rules that already exist in the tax code. Think about it. If your projected tax liability is the sticker price, proactive tax planning may be able to help you create a legal discount. But that discount usually does not happen by accident. It happens through modeling, timing, implementation, and coordination before the year is over. So here's what you need to watch out for. Not every strategy applies to every W-2 taxpayers. Some deductions are limited. Some are passive. Some require business income. Some require what's called material participation. Are you charitably inclined? Can we pull in charitable strategies into your portfolio? The key is most of these have to be implemented before the transaction happens or before December 31st. So this is not about chasing random tax loopholes. It is about building a custom strategy around your actual facts. If you're a high income earner, do not assume your only option is to earn, withhold, file, and pay. And don't wait until April and treat your tax liability as a bill. Plan proactively, because when planning is done throughout the year, you may be able to reduce your tax liability significantly, improve your cash flow, invest more intentionally, and keep more of what you earned. Tax code is not just a list of what you may owe. It's a roadmap of opportunities, but only if you look before the year is over. I hope this was helpful. If this was helpful, please like and subscribe to the channel wherever you're listening. This helps me bring in more advanced tax reduction strategies to you. Thank you.